So welcome back to my channel. In today's video, what we are going to do is we're going to look into the charts that what are the real order blocks. There are so many order blocks in the trading space. Like, people have mixed up the order blocks and supply and demand in one, because lots of people have a lack of information, or like they just want to tweak it a little bit and they want it to be in a supply and demand. Order block is a block of orders which happens when price goes and takes the liquidity. So what do I mean by that? So like, if you look it over here, when price goes down and takes the liquidity, then this candle is responsible, this black candle is responsible for stop loss hunt, right? So now whenever the big institutional traders or big algorithms, like the guys those who have lots of money, when they will see this candle like this, they will start buying and placing their limit orders right over here, or they have already placed their limits right over here during this candle. They're just putting in the number buy over here. They're just placing the buy limits, and now market went up. So if market comes down to do retracement and to fill all the imbalances, over here in this candle there is a lots of orders resting, okay, the orders of big traders. So what price will do, price will come back down, just test it a little bit, and then it can short towards the upside, okay? So this is what the order block is. So there are so many types of order blocks, like there is like breaker block, but the thing is you only need a one order block, okay? Just make it simple and just use one order block and just try to be master it, okay? Don't go for each and every order block, breaker block and like algorithmic order block. Like, there are so many order blocks which I have discussed on my YouTube channel, but for a beginner or like a person who is just trying to figure it out, okay, it's enough for this normal order block, because today I'm going to just tell you about the normal order block, okay? So now let's look at this example. So over here in this example, if you can see that this is a 5-minute time frame, over here it was creating a demand zone. It just taps the demand zone, short towards the upside, and now it falls down. This candle and this candle, okay, this candle's body didn't close below of this liquidity line, okay, but this candle's body closed below of this liquidity line. So this candle will be our order block, and this candle was really responsible to take the losses, all the stop losses over here, okay, because everybody plays their stop loss like 1 or 2 pips below of this demand zone, okay? So from there what happened, there was a sudden move towards the upside, okay, and now we can see that this candle was responsible. So this candle is what, this candle is order block, okay, and now this candle is order block, and price comes down, taps towards that order block, and then shorts towards the upside. And over here there was a fair value gap also, if you can see over here, okay, there was a pretty good fair value gap, and like it just tapped into it and then shorts towards the upside. And another thing is this, that you should know the order flow also. So what do I mean by that? Like order flow in the sense, you should know that where you should bring the high time frame narrative. So if you're trading on 5-minute time frame, you should know that where the 15-minute time frame or 1-minute time frame is going. And I made a video about it, and I will just put it in like description or something. Just check out that video also about the daily bias and short-term trend. So if you're trading on 5-minute, you just want to know about the short-term trend, okay? So the short-term trend is saying that short-term trend is bullish, so then only the order blocks which are responsible for bullish move will work. Otherwise, like, other order blocks will not work, okay? And some of that is like, you can find it when, and now where you can find this order block, okay? So you will find this order blocks whenever price will go and take the liquidity, okay? So the first priority, you should write it down somewhere or something like that. Your first priority should be to look for the liquidity rate or liquidity hunt, okay? When the liquidity hunt is done, then you can look for order block or fair value gap. I should say that you should look for fair value gap, but if there is no fair value gap, then you can use order block also, or you can use order block for a confluence, okay? So first is, where you will find it, wherever it is like taking this liquidity. So it took liquidity over here, okay, it went down below of these two relative equal lows. So that's why I found this order block, okay? And now order block is nothing like the last upward candles or last downward candles like this, okay? It's not an order block. People have mixed up the supply and demand in one thing, okay? That's supply and demand, okay? Last upward candle or last downward candle. I'm talking about first thing you should look for, that stop losses. So over there the supply and demand doesn't work, right? It doesn't work because supply demand says that price will come down, like price will come down and it will respect this support. It will not go below that, it will just respect the support and it will go up, right? This is what it says. But over here price goes just a little bit down to take the stop losses for the liquidity, okay, to fill up the liquidity, and then it goes up. Show you another example. So over here it's an example. Now the order block can be a 2 consecutive candles also, okay, because I saw lots of people saying that last upward candle or last downward candle is an order block. That's not order block, that's a supply and demand. But if you look at over here closely, this candle and this candle was the first one to take the liquidity, and this candle also. So these 2 candles ran into the liquidity. So these 2 candles are responsible to take the stop losses, okay? So these 2 candles will be our order block. But if you go on 15-minute time frame, it can be one single candle over here, okay? 1 2 3, like one single candle over here. So so it will be like a 1 downward candle. But if you just go in smaller time frame, you can see 2 candles. And now if you can go on 1-minute time frame, there will be multiple candles, okay? So just don't get confused. If you can see a order block on a specific time frame clearly, then stick with that specific time frame, okay? So over here you can see that these 2 candles were the order block, and then you can see a structural break over here. This was a swing high, and I made a video about like a long ago about swing highs and swing lows. So this is a beautiful swing high. The swing high was broken and then it came back down, and there was a pretty good fair, like really nice fair value gap also right over here. Okay, it just taps into that fair value gap and then it shorts towards the upside and make a liquidity run of this buy side liquidity. Okay, this was the liquidity grab and this is the liquidity run. All right, so now I hope you understood this one. Like it can be 2 consecutive candles also, or it can be 1 candle also. Like over here it was 1 candle. This candle's wick, this candle was also responsible, but this candle went down. Okay, so that's why this candle is our order block. And over here also this candle was also responsible, but this candle was the main one. So over here, if you just take this candle as an order block, price didn't tap to this order block's high. Okay, it just come down, test towards this it just taps into this fair value gap and then shorts towards the upside. Now let's go on this. This is the prime example, the main example which I showed you over here. Okay, so if you can see that price went down and now it was a news. Okay, but during the news also it respected that order block. Okay, it just came down. There was a fair value gap also. It just filled up all the imbalances right over here, and all this liquidity void, it was filled over here, and then it just taps on it and then it just goes towards the upside. So the thing which I'm trying to say is that you should look for order blocks. Okay, you should look for order blocks wherever the liquidity. You should first look for liquidity hunt, and then you should look for the order block to be formed. And how the order block will be formed, you can see as fair value gap, or you can see like this type of candle which can be responsible to take the losses. It's easy to spot out, right? Anybody can do that. And then what you can do is like you have to look for fair value gap and the market structure shift, and then you can just place your buy limit right over here, and you can place your stop loss just a little bit below of this structure. So like this. Okay, don't do like this, because sometimes what happens, like price comes down one more time, it will not respect your fair value gap or order block. It will only respect liquidity. So what can happen, like price can come down and take this low one more time, and then it can go towards the upside. So your stop loss will get hunted if you place your stop loss just a little bit below of this structure. Just give it enough room and just then target for 1:2 or 3 only. Okay, and there is a lots of wrong information out there which people say that a last upward candle, so last downward candle is an order block. That's not an order block, that's a liquidity zone. The last upward candle, above that there will be a buy side liquidity, and last downward candle, below that there will be sell side liquidity. Okay, you can use that to find out the liquidity, but you cannot use that to take trades. Okay, so I hope you understood, and this was the normal order block which I explained you with this, and this is enough. Like this is enough for you to make a lots of profits from it, because if you complicate it more, it will be way much difficult for you guys to understand. If you just have this concept in your mind that first I want to see a liquidity rate, and then I want to see a fair value gap, or I want to see a first I want to see a liquidity rate, and then I want to see a fair value gap or order block, and then I will enter from there. So that's how you will find the order block. Okay, so I hope you guys understood that how to find an order block. Okay, and how to trade off it, and what's like it can be consecutive candles also, and it's not that last upward candle or last downward candle. Okay, it's the candle which is responsible to take the stop losses. Okay, and like another thing is like don't use this, and like if you can see order block clearly on a time frame, okay, don't go below that time frame if you can clearly see an order block, because if you keep on going in a smaller time frames, you will keep on looking at like the candles will be just like this. Like I should show you. See, if you go into smaller time frame, this what will happen. Now there are 2 candles over here, so if you will refine your order block like this, so don't do that, you will miss the opportunity. Okay, so that's what I tried to explain today. So this what it is, a normal order block which is enough for you to use, and just use this order block in your trading. And if you guys have any questions, or if you want something new on some other topic, just let me know in the comment section and I will make a video on it, on your doubts. So until next time, wish you good luck and be safe.